Vietnam's stock market is on the brink of a significant transformation, and a catalyst for this change are emerging. The recent interest rate cut by the Federal Reserve has sent ripples through the global financial landscape, and Vietnam is poised to benefit. A new era for Vietnam's currency and market? The Fed's decision to lower interest rates has eased the pressure on Vietnam's currency, the VND, which has been under devaluation strain. This move, coupled with an anticipated improvement in dollar supply, provides the State Bank of Vietnam (SBV) with an opportunity to manage foreign currency demands and exchange rate challenges more effectively. The impact of interest rates and dollar hoarding, Nguyen Thanh Lam, a director at Maybank Investment Bank Vietnam, highlights the significance of this rate cut. He believes it aligns with domestic policies and may reverse the trend of dollar hoarding. Once the Fed's interest rates fall below 3% per annum, investors and institutions might repatriate USD to Vietnam, improving dollar supply and allowing the SBV to rebuild foreign exchange reserves. Market upgrades and international recognition. Vietnam's stock market is on the cusp of a major upgrade. The government's efforts have positioned the market to meet all criteria for emerging market classification under FTSE Russell standards. This upgrade, expected in early October, is seen as a game changer. What does this mean for foreign investors? Foreign ownership in Vietnam's stock market has declined, primarily due to interest rate differentials and global investment trends. However, experts like Nguyen Thanh Lam from Yuanta Vietnam Securities expect the Fed's rate cuts and upcoming IPOs to attract foreign investors back to Vietnam. A breakthrough for Vietnam's stock market? Du Minh Trang, head of research at ACB Securities, is confident in a breakthrough. This optimism is based on several factors: market valuations below the 5-year average, positive GDP growth and corporate earnings prospects, and the anticipated support from the Fed's rate cuts on domestic liquidity and exchange rates. The role of market upgrades and structural reforms. Nguyen Dinh Thuan, an analyst from KB Securities Vietnam, emphasizes the stock market's strong fundamentals and its tie to macroeconomic growth. He believes equities offer compelling long-term returns and flexibility compared to other investment channels. If the market upgrade is successful, it could unlock billions in foreign capital, catalyzing Vietnam's stock market development. Infrastructure development and public investment. The government's plan to invest hundreds of trillions of VND in key infrastructure projects from 2025 to 2030 is a significant boost. This injection of capital is expected to drive GDP growth and create opportunities for companies in infrastructure construction, building materials, steel and cement. A new growth cycle for Vietnam's stock market. The convergence of factors, market upgrade, returning foreign capital, and proactive public investment positions Vietnam's stock market for a new, more sustainable growth cycle. This cycle promises to be increasingly attractive to international investors. The future of Vietnam's stock market. Vietnam's long-awaited market upgrade is within reach, and the stock market is entering a pivotal point. While analysts caution about stretched valuations and foreign outflows, the overall sentiment is optimistic. Vietnam's stock market is poised for a significant transformation, and the world is watching.